Hello and welcome to another episode of Investia Global. David here, and in this episode we'll dive into a game-changing low-risk entry strategy that has the potential to transform your trading approach completely. We'll also demonstrate how to execute trades similar to the ones we took on gold and Australian dollar USD. First, we'll analyze how and why we took this short trade on gold this month, which yielded an impressive 1:9 risk to reward ratio. We'll break down the rationale behind the trade, including our decision-making process for setting stop loss and take profit levels. Next, we'll examine why we entered a long trade on gold right after taking profits from our short position. We'll also discuss the reasons for continuing to hold this position to this day, August 26th. Finally, we'll review all our current active positions like this and discuss how we've applied the same concepts covered in this episode. Let's get right into it. Please note that all the concepts covered in this episode are built upon the materials from our previous videos, so be sure you're up to date with those before diving in. Let's begin by exploring how to execute a low-risk sniper sell position in the markets. As we discussed in our last video, in an ideal uptrend, we look for price to break through market structures, forming higher highs and higher lows. In our last video, we saw that after price breaks the last higher low and creates a lower low, we enter at the point of the structure break. However, in this instance, we can observe that price formed a lower high before breaking the market structure. To set up a low-risk trade, we'll first mark the last lower high, which indicates the initial sign of a trend change. We'll then identify the point and wait for the price to retest this level before anticipating a move downward. Let's look at some market examples to illustrate and clarify what we've just discussed. This is a 4-hour gold chart, and as you can see, the price is in an uptrend, consistently making higher highs and higher lows. As the price began to retrace from this high point, we observed that the retracement candle showed significant movement and momentum. Following this, the price consolidated before breaking the market structure, which was also our last higher low. After the market broke structure, we confirmed that the trend shifted from an uptrend to a downtrend. Now, we'll mark the last lower high and place our short limit order accordingly, setting the stop loss above the most recent higher high. As you can see, the price returned to our entry zone, triggering our short position. Next, we'll look for a point to take our profits. The price then dropped to our take profit area almost immediately. Now let's see how this strategy applies in a downtrend. In a downtrend, we want to see the price making lower highs and lower lows for an ideal downtrend. Before the price broke the last lower high, it formed a higher low, which occurred prior to the market structure being broken. After the price breaks structure and forms a higher high, we mark the last higher low. We then wait for the price to retrace to this zone before taking our long position. Let's look at how this plays out on the charts. This is the same 4-hour gold chart from our previous example. As we can see in our previous example, the price transitioned into a downtrend. This downtrend was characterized by lower lows and lower highs. As the price made its next retracement, it gained increasing momentum. Eventually, the price broke the market structure and formed a higher high. We'll mark the last higher low as a potential entry point for long positions and set our limit long orders accordingly. We'll set our stop loss below the recent lower low. As the price returned to our entry point, it began to rise, yielding an excellent 1:19 risk to reward ratio. Since then, the price has continued to make higher highs and higher lows. We're still holding this trade as of August 26th. Let's review how both of these trades were executed on a single chart. As we can see, we first executed our low-risk short trade here, and the price then fell to our take profit level. Immediately after taking profit, we entered a long position at the same price level, which allowed us to capitalize on both moves effectively. Important to note is that all the trades discussed in this episode involve advanced price action techniques, multi-timeframe analysis, and various concepts that we'll cover in future episodes. That's all for this episode. Don't forget to like, comment, and subscribe. And I'll see you on the next one.